In this video, I'm going to talk about seller credits, aka how do you get free money basically when you're buying a house? How do you get somebody else to pay for things? Now, before I dive into this, do me a huge favor. If you like the video, hit that like button. And if you're not already a subscriber to the show, make sure to follow the channel so you get more content like this. So check this out. I've been doing mortgages for over 20 years. These are things that I see all the time. And one of the most common questions that people have when they're buying a house comes down to seller contributions or seller credits. Basically, the seller, an interested party in your purchase transaction, how much are they allowed to contribute to the transaction to help you get it done? And so the way that it works, it's going to depend on what type of financing that you're doing. And in fact, to make this really easy, we created a handout. You can download it right there. It breaks down the different kinds of loans, how much the seller credit can be based off of what type of loan that you're doing. But something that I need to point out right away is that when we're talking about seller credits, something that the seller credit cannot pay for is your down payment. So let's say, for instance, that you're doing an FHA loan, which if you're interested in FHA, I did a video about that, a full breakdown, you should check it out. But let's say you're doing FHA and you're doing a 3.5% down payment. The seller credit cannot cover your 3.5%. You got to come up with that. The seller credit does not pay for down payment. What it can cover, however, is what we like to call recurring and non-recurring closing costs. Recurring would be like things that happen after your deal closes, like property taxes, homeowners insurance, homeowners association dues. Non-recurring would be things like lender fees, title fees, escrow, county fees, things like that. So let's do a breakdown, and I'm just going to start at the top. But basically, when we start with conventional financing, which is the most common type of financing, that's your Fannie Mae, your Freddie Mac financing. The seller contributions, which the seller could be a person selling their own house, it could be a builder, and sometimes even if you can get your real estate agent to cough up some of their commission, the real estate agent can actually contribute to your seller credit as well. So the way that it works with your conventional financing, it depends on how much money you're putting down. If you're doing less than 10% down, then your seller credit is going to be capped at 3%. So if, for instance, that your purchase price was, let's say, $400,000, then the seller credit could not be more than 12 grand. 3%, 4,000, you get 12. All right, you follow me now. So continuing on with Fannie Mae, Freddie Mac seller contributions, if your down payment is anywhere between 25 to 10% down, then the seller can contribute up to 6% towards your closing costs. And if you're putting more than 25% down, then they can contribute all the way up to 9%. Now let's be realistic here though. Most circumstances, we don't see the seller contributing 9%, 6%. And in fact, I never even see it where your closing costs are that much. So the most common situation that we see is where the seller is usually giving like 1 to 3% of the purchase price towards your closing costs to cover those types of things. But since closing costs are not typically, 6 to 9% or something, that's usually just a nothing burger. However, that's how the guidelines work, and I'm just bringing you up to speed on those. So let's move on from your conventional primary residence purchases, and let's say that you're buying an investment property and you talked the seller into giving you some money for a credit. The maximum contribution, regardless of what your down payment is going to be 2% of the purchase price. So if you're buying a place for $500,000, the seller cannot contribute more than $10,000 towards your recurring and non-recurring closing costs. All right, so let's move on to FHA financing. Regardless of your down payment amount, when it comes to FHA, the seller can contribute up to 6% towards your recurring and non-recurring closing costs. And again, those things could be the lender fees, title, escrow, property tax, homeowners insurance. All of those things can be paid for by the seller or the realtor or the builder through a concession. All right, so if you're one of my fellow veterans out there, you're doing the VA loan, the maximum seller credit is 4% of your purchase price. So if you're buying for $500,000, 4%, that's 20 grand. That would be the maximum that could be contributed towards your recurring and non-recurring closing costs. Now, if you're doing a USDA loan, which I know there's not a lot of you out there doing them, but for all you folks out in the country that are looking for USDA financing, the maximum seller credit is 6%. 6%. Okay, so 6% of your purchase price, that's the max that the seller could contribute towards your transaction. Now, I know, guys, there's a lot of moving parts to this depending on what kind of loan that you're doing and how much you're putting down, which is why I put together an easy handout. You can get it in the link in this video. Makes it easy to reference which kind of seller credit is allowed for which kind of mortgage. If you got questions about this, do me a favor, put them in the comments below. I'd love to answer them. If you want to see more videos like this, let me know in the comments. Make sure to subscribe to the channel, and if you haven't already, hit that like button, and I'll see you on the next one.